Welcome back. You're listening to Houston Real Estate Radio. I'm your host, Shannon Register, and every week we bring you news and information you can use on your next real estate transaction. Today, we are talking about something. If you've got a mortgage, you need to listen up to this because we are talking about mortgage insurance, life insurance that may have come with your mortgage policy. And maybe it's the best thing for you, maybe it's not. So we're going to be talking with our insurance expert this segment. Mr. Tim O'Neill is in the studio.
Thank
Tim
you.
O'Neill with StateFarm, and he is a chartered property casual underwriter. I like that little title there, Tim.
Thank
and
you.
You've got a new title you're going to be having one of these days here real soon,
I do, yes,
right?
August 1st. I'm hoping to be good to go for the Chartered Life Underwriter designation.
That's exciting.
Yeah, just passed all the classwork and I'm waiting for the official notification.
You just keep learning and growing and doing more and more business. I love it.
That's it.
What all do? You sell life insurance, but what else do you sell?
Our bread and butter's always been, house and two cars. That's what it's all based on and built on. And then, by the way, we also offer life and health and disability and, all kinds of good stuff after that. But it's always about the house and two cars.
Well, I know you've done great work for me in the insurance realm, and I appreciate that. And I appreciate you coming on the show. I know you've got some great information for us today. So some of our listeners out there have a mortgage. They may or may not have mortgage insurance. When you purchase a home, does your lender give you the option to put mortgage insurance on it?
Generally, they do. And, we say in the business, the best life insurance policy is the one that's in force on the day that you die.
Okay, that's
right?
good.
And that's the only one
that's the only one that matters.
Yeah. So it's an academic discussion. Is term better than permanent? And is UL better than whole life? And is group better than individual? And none of it matters. I mean, whatever, if we could all look in the future and say, okay, we know that this one is going to be in force when this person dies, and everybody, that's the one. Let's do that important one. So it's always customer focused, and any ethical person, that's how we roll. Is we want to make sure we're doing the best for the person. So there are plenty of ways to get there.
So when you do have a mortgage and you have insurance on it, what is that called?
Generally, it's called mortgage cancellation.
Mortgage cancellation insurance. And so that means if you're paying your monthly mortgage, life's going great, everything's good, and then one of the people on the mortgage note dies, the house is completely paid off.
So that's right. The policy would generate a death benefit.
Okay.
And it's tied. It's usually, sometimes it's a decreasing term. If your mortgage starts off at $300,000 and it's going to amortize over a period of years, sometimes the death benefit on the policy is also going down so that it's always tied to the outstanding mortgage amount.
Right.
But sometimes it can stay constant. And that's one of the other things we were talking about, how to decide and which is better. And so that's one of the factors is it a fixed $300,000 policy the whole time,
or is it
diminishing over the period of years?
Right.
So lots of questions to ask.
And you're paying that policy monthly when you make your mortgage payment. Is that right?
It can be rolled in. I've seen it done where the lender will arrange either through themselves or through an affiliated company to offer a mortgage cancellation policy, and they'll offer to roll the premium in along with your principal and interest and PMI and whatever other your taxes and insurance, whatever they're escrowing. They'll often position that as one great big bundle of services.
I can imagine. Do you know anyone who's ever had this benefit, used this benefit? I don't know anyone who's ever.
I've never had anyone personally, and
I can imagine that there are people out there who have benefited from this because they never thought about buying life insurance. They bought a house and it came with the house and it's just a done deal. And then, one day something happens and they're glad they have it. I can see where that can be a benefit. But there are also some negatives to it. Let's talk about that. What are the negatives, kind of the questions you need to ask to know whether it's right for you and what your other options are, because you can go outside of the lender and have other options.
You can. And it's great that they raise that at that point of sale, and it raises awareness, and that's something that we try to do. We spend millions of dollars a year, trying to raise awareness among customers that you need this product and this is important for you. So it's very good that they do that at that point of sale. So then you have to ask, okay, what is this going to do? It's like going into the hardware store and saying, hey, what's the best tool you have here? Well, are you trying to drive a nail? Are you trying to turn a screw? Are you trying to cut a board? What are you trying to do here?
Right.
So oftentimes what I've found when doing comparison, for sales comparisons, I'll say, let's take a mortgage cancellation policy. And it only has the option to pay off the mortgage. If the borrower dies, the mortgage is paid off, and thus it's called mortgage cancellation insurance. Well, what if paying off that mortgage doesn't make sense at that point in time.
Yeah.
Let's say you're using the mortgage interest deduction, and the mortgage is only 3.5% or 4% to begin with, and now you don't have the option to take that death benefit and use it in another way. So that's a drawback to that policy that counteracts the ease of placing it at the right there in the transaction. But what if you don't want to pay off your mortgage? And so it's a question to ask is, do I have to do it that way, or will I have the option to do something else with that death benefit? Yeah, and just take it and do something else with it that might make more sense.
And you said it's a term policy, so when the mortgage is paid in full, it ends. Right?
It can be. Sometimes, let's say you start off with a $300,000 mortgage, and the policy might be a $300,000 policy then, but it will be tied to a 15 or 20 or 30 year amortization.
Right.
So that at the end of that time, when the mortgage is canceled, the policy might be down to nothing, or it might retain a residual amount, like a $15,000 or $20,000 burial amount, possibly, or it could retain the whole original amount throughout the duration. So that's another question to ask, and that's one of the things that when there's a paper shuffle and here we go, we went ahead and gave you life insurance, and okay, great, that's nice, but these are some of the questions to ask: is what can I do with it, and
can you convert it to something else?
Because oftentimes not. Oftentimes it's just a one-purpose policy, and it's to cancel that mortgage in the event of premature death, and you won't have options.
And I would imagine there are some people out there who have the mortgage cancellation insurance, but then they've also gone out and bought a life insurance policy as well, in addition to that.
No doubt. And there's the rule in life insurance is you have virtually an unlimited insurable interest in your own life. So there's not anybody going to be saying at any point, hey, that's too much, as long as
they want you to bet too much.
As long as you can justify it and it's not some ridiculous, obviously fraud. But you can definitely get a purposed policy to cancel your mortgage, and then get a purposed policy to fund your children's education and, survival income payments for your spouse or whatever you want to do. That's what we do when we sit down and do a comprehensive needs analysis. That's what our job is to find out, do you need a hammer? Do you need a screwdriver? Do you need a crosscut saw or a rip
And I know
saw?
you are really good at sitting down with clients and talking to them, just really looking at their needs. What is it you need? What is your goal? What are you trying to do to make sure that the policies that they get accomplishes their goals? And let's talk about the alternatives. If they didn't do a mortgage cancellation insurance policy, what are their other options?
Well, you could buy just a straight up term or whole life policy it might be just for the mortgage, or it might include the mortgage amount and the amount for other needs like children's education and survivor payments for your spouse. So it's always a question of affordability. And, oftentimes at that purchase point, money's tight, and people may have just used all of their savings for down payment, and so they may not be flush with cash, but they may, and that's one of the things in our business is never make your mind up about someone.
Well, and another thing to think about is if you qualify for a conventional mortgage and you're planning on putting 20% down, you could shift over to an FHA mortgage, you can put as low as 3.5% down, but maybe you want to put 10% down and put some of that other money towards life insurance. It's a good time to think about those life decisions.
Exactly. And so it's haste makes waste. And sometimes when it's all seemed too easy, like, boy, that was really convenient and easy. Oh, yeah. But what did you actually work out with? And what was your opportunity cost? What was the second best thing that you could have done? And so, but like I said, it's a good transaction. It's a good time to raise that awareness. But you do have the option to go on an individual policy and have a lot. Just face it, if you own and control the policy, it's almost always going to be better for you in terms of your options than something that you got as on a group basis. That
you could use the money for whatever you need instead of just for paying off the mortgage.
Long term, you're going to have more options and more flexibility and more ownership.
Because you could potentially convert the policy to something else down the road.
It's rare that I've seen mortgage cancellation policies that have a conversion right going forward, because eventually the mortgage will end. And particularly now with interest rates being as low as they are, people are taking 20-year mortgages. And so 20 years later, is that policy...
Even 15 year.
Yeah, even 15 year. So now is that policy over and done? Is your life insurance kaput?
Yeah, and now you're 15 years older trying to buy life insurance versus 15 years younger trying to buy it.
What if I had sold you a 30-year policy at that same time,
Right.
that included mortgage cancellation, but now it's got another 15 years to run on it. What if?
Okay, we've got just a couple minutes. I want to go over real quickly. Everybody's always confused, including me especially, but about term versus whole versus universal life. Give us a quick synopsis. What's the difference in the three?
Whole life and universal life are cousins.
Okay.
They're both permanent insurance policies.
Okay.
And they don't have an ending date.
Okay.
Term insurance it can be for something for 5 years, to insure paying off a car, or 10 years for a boat,
and when it ends, it either ends or you have to convert it to something else.
It does.
Term is not good.
Term is excellent because whole life and universal life are multiples of 5 and 10 and 20 times as much as term insurance.
Yeah, it's inexpensive.
So sometimes it's not a question of, it's like a question, well, would you rather have a Chevy or a Bentley? Well, it doesn't matter because I can't afford a Bentley. And a Bentley is so much better than a Chevy in so many ways, but it's pointless discussion.
Right.
So whole life is the Bentley. And, but it's not for everyone. But ultimately, what people do have to understand is because it's not an either or decision, because almost always term insurance includes the right to convert your term insurance later to whole life or universal or something else. So it's a starter, it's a foothold on, and you get on that first rung of the ladder like anything else. And like we've said, what's the best life insurance policy? The one that's in force on the day you die. Doesn't matter what type of contract it was. It just mattered that you got it and could afford it and that you kept up the payments.
And if you can afford whole life or universal life, what's kind of the difference on those? One is a little more stable than the other?
Whole life has very few options, very little flexibility to it. It's a guaranteed contract. You pay a certain amount every month or quarter or year, and the company basically guarantees the outcome and takes care of everything.
That's really the luxury to be able to afford whole life.
If you can afford whole life. Universal life has some flexibility where your payment, you can delay payments, you can skip payments, you can send in a little less, you can send in a little more. You can raise and lower the face amount of a universal policy without having to buy a new policy. So it's
a little more risky.
It is because it's not fully guaranteed. The outcome's not fully guaranteed. It's sort of like a defined benefit pension versus defined contribution. It's the same idea. Who's taking the risk? On a whole life policy, the insurance company is taking the risk that it's not all going to work out. And on universal life, you have to manage it, and you have to visit with your agent every year or so to rerun the numbers and say, is this policy being funded adequately? Is it going to last, or is it going to peter out when I'm 88 years old and I paid on it my whole life? And because I underfunded it, now I've got a problem. On whole life, as long as you make the payments, you're good.
You're not going to have that
very,
problem.
very low maintenance versus UL. But UL has all that flexibility.
When someone's buying a home and they're getting this option of this mortgage cancellation insurance, they can get a copy of that policy and bring it to you and compare it to term, whole life, and universal life?
They can do it like that. Or as you know, buying a home is public record. And so the week after you close, here comes a wave of direct mail solicitations from every life insurance company in North America. And you'll get 15 of them in that time because they know you just bought a home. And they think they're the only one who knows that, and so every company thinks, wow, we've got a great prospect here. They just bought a house. Wow, let's hurry up. But that's the time, and that's what'll happen. So yes, we can definitely give them some options, but it's just similar to being a realtor. It's like, what neighborhood do you want to go look in? Do you want to go look in River Oaks? Can you afford to live there? Why would you take somebody there? So I'm not going to show somebody policies that are $2,000 a month if that's not an option, So we'll just say, okay, what can we do that gives you the best long-term outcome that you can afford today?
And with term, you're making monthly payments?
You can.
Or yearly
nothing
payments?
to prevent you paying for it yearly, sure.
Okay. And then whole and universal, you can do the same
thing,
monthly or yearly, quarterly, however you set it up.
It's all just math. So that they just figure out when the payment frequency is going to be, and they plug that into that time value of money function that we all had to study at one point along the way. And that's
not me, Tim. I didn't study
that. Did you not?
Okay, well, great information. I appreciate it. And I think that it's just raising that awareness so that homeowners are aware they do have options. There's not a lender out there that I know of that would make you buy this type of insurance, but it's kind of something they tack on, and you want to be able to compare them.
Sure. And you want to have access. And that's what, local agent offers is policy is always going to be the same policy number. We're not going to be sold to anybody. We're not going to merge with anybody. And it's going to be one point of contact and one service provider the whole time, and you won't have to chase your policy every time there's a merger or a consolidation. And, Federal United Life Insurance merged with, Midwestern Consolidated. And now who has my policy, and what 800 number do I call now? That's what you necessarily don't want. It's much better to have a local guy that and if there's a problem, you can walk in my office and pound on my desk.
Yes, and pick up the phone and call you and catch over there on Facebook and email you. And your website is?
It's the phone number. I got tired of having two. So the phone number is 281-358-4444, and the website is that same number, 358-4444.com, and I'm Tim at that address. So I tried to consolidate into one piece of information.
Well, you do a great job for clients. I'm one of your clients. You have lots of clients over here in the real estate industry, and I know that
Thank you.
You do a great job out there. Your office is in Humble?
Kingwood.
Kingwood. But you can sell policies all over the Houston market.
Oh, my territory is Texas. I'm licensed, and we can go border to border in Texas, and I will. And I have.
And you have. All right. Very good. That number again, 281-358-4444. And if you want to catch Tim online, it's 281-358-4444.com. And Tim, you can also find Tim on our website at HoustonRealEstateRadio.com and link directly to his website that way as well. Tim O'Neill with State Farm. We appreciate great information today on insurance.
Thank you very much. Anytime.
Isn't it interesting? We can tie insurance back to home ownership. Right. Everything ties into home ownership.
It does indeed.
It's our life, right? All right. We appreciate you, Tim. Thanks so much.
Thanks again.
We'll be right back here on Houston Real Estate Radio.